Hey guys, and welcome to the Working Money Channel. Watch what's going on with the market, guys, because none of this is coincidental. All of this has to do with market movement, especially when we're looking at Bitcoin hodlers from 2010. So this from Ian Northing. And this article talks about Satoshi-Era BTC worth 11.3 million was moved for the first time in 10 years. Guys, you got to understand, the people who are holding this haven't touched it in 10 years. And now they're moving $11 million or around $11 million worth of Bitcoin as of yesterday, October 11th. So the data on-chain analysis providers reveals that a huge amount has been sitting idle for the past 10 years, as this was the first time it was moved. It appears that these transactions of Bitcoin mined were during the days that Satoshi Nakamoto was active. Yesterday, October 11th, there was a transaction of 1,000 Bitcoins mined in September 2010 going out to an unknown set of addresses. The total worth of the Bitcoins was around 11.3 million, as we had mentioned, at current rates. At this point, it's unclear who the miner was or who is the receiver of the massive amounts. My thought is that this person has been holding the Bitcoin for 10 years. They are seeing the market rally, and now it's time to cash out. So yesterday, if we bring up BTC on the chart, we did see, so first of all, let's talk about today. We did see some downward momentum if we put this on the hourly, but these are just the ebbs and flows of the market. Nevertheless, we are seeing an overall bull run, guys. This is Bitcoin on the daily, and overall, we're seeing the bulls move. We saw Bitcoin hit a high of 12,400 back in the summer. There was a bit of a sell-off, and now we're seeing an upward trend. The same is happening for XRP. So my thoughts on this, we are seeing these old school Bitcoin hodlers taking a portion of what they have mined back in 2010, because let's not forget, 1,000 Bitcoin back in 2010 wasn't worth that much. So the people who have this locked in an account probably have a lot more and probably sold off a lot more when we saw Bitcoin rise back in 2017. Okay, these are whales. Let's not forget, when we start to see portions of Bitcoins that haven't been moved for 10 years, that to me is a signal that the whales are waiting for a nice level of resistance to cash out more Bitcoin. This could also have to do with the economy as a whole. Let's not forget the IMF, the World Economic Forum, and major bodies around the world are gearing up for this great financial reset that some are suggesting is going to happen sooner than you think, guys. And where is Ripple in the middle of all this? Well, we've got Ripple partners still doing their part to expand the XRP ecosystem, this with regards to Standard Chartered Bank. And it was brought to me by Mike Manfield here on Twitter. So Standard Chartered Bank in Singapore has partnered Moneythor, a leading digital banking software provider, to launch a new data-driven SC Money Manager tool. SC Money Manager aims to help customers better manage their finances by providing a suite of personalized features, including a holistic overview of historic trends and patterns, expense and income insights by category, customizable budgets, automated personalized alerts, and contextual nudges, all within the bank's flagship mobile banking app. So this another extension of a partnership with Standard Chartered Bank, a RippleNet partner. Guys, I'm not going to get into this in depth, but this is all very, very important to understand with regards to this overarching concept of Ripple and XRP being that vehicle to move money worldwide. Partnerships beget partnerships. This we keep seeing every single day. Another one here, guys, from the Cryptic Poet at @OneCrypticPoet on Twitter, and it has to do with another Ripple partner, Axis Bank. They have launched ACE credit cards in collaboration with Google Pay and Visa. So the card is designed for the growing base of users keen to participate in the digital economy. Payments for essential use cases like mobile recharges, bill payments made via Google Pay earn users 5% in cash back. Users also get 4 to 5% cash back for spends made on daily use categories such as food ordering, online grocery delivery, cab rides for transactions made on partner merchants platforms such as Swiggy, Zomato, Big Basket, Grofers, and Ola. There is also an unlimited 2% cashback on all other transactions, making it one of the most rewarding credit cards in its segment. And this coming out of India, okay, Axis Bank, a Ripple partner, expanding their web as well through these peripheral partnerships indirectly associated with Ripple, and likely will be using XRP one day. Considering the way this world is going, moving money is going to be very important in this global economy. Less and less are we shopping local, more and more are we shopping globally. Why else would Amazon be so big? Think about that for a second. I'm going to keep moving along because I saw this, guys, from Martin Volk, okay? Over 72% of all investors believe that XRP will reach $100. And guys, I'm amongst that 72%. I gotta tell you, XRP will reach $100 one day. But We have to see the liquidity. We have to see the rails being built. We have to see a surge, a great advancement in the cryptocurrency industry before XRP can reach $100. Now, this info has to do with an infographic recently released by @Stetus on Twitter, where he gathered information. Over 1,000 members of the XRP community showed that the majority of investors believe that XRP price will rise over $100 despite the rather low average performance in the past 2 years. A substantial majority of 72.4% of survey participants believe that the XRP price will reach $100 at some point in the future, so there is no pinpointing a specific date on this. Of course, we have done price models on this channel. We have seen different valuations for XRP based on supply and demand, based on market pushes, based on technical analysis. Okay, and $100 certainly not out of the question, guys, considering the kind of movement we have seen for XRP even in just the last 5 years. Let me just bring up the Poloniex exchange here for you guys with a little bit more information on here. We saw XRP price rally significantly from the last time we were basing for, what was it, two years, December 2014 to about March 2017. So two and a quarter years, give or take. And then XRP basically skyrocketed from under a cent, from 0.005 cents all the way to all-time highs at about $3.56. That is a over 61,000% increase. Over 61,000% increase from just March 2017 to January 2018. Okay, so in less than 1 calendar year, XRP rose 61,446%. So guys, to put things into perspective here, 61,446%. If I were to say 25 cents times 61,446%. Guys, that would bring XRP up an extra $153.62. So 153.62 plus 25 cents would be the total number there. So about $154 per XRP. It's not unheard of. We've seen it in the past. The fact of the matter is, even if we were to stay conservative, we have seen these rallies before in the cryptocurrency market. And, we've done these price predictions in the past. And I still even have target levels here from those past videos that I've done. But realistically, guys, a $100 XRP is not out of the question. We could see an XRP go as high as $50, $60 in this next rally. $100 though, certainly on the table with the real world utility. So I don't think that most of XRP investors are out of their realm. I think that if you are looking for the long term, this might not happen during this rally, but if you're planning on hodling your XRP for the long term, this is a very, very attainable price. And the fact of the matter remains, 94.3% of the survey participants stated that they are indeed long-term investors. Now, for how long, I don't know what that means. But it's great to see that people in the XRP community are very positive on the cryptocurrency. Again, guys, the sky's the limit. When the price is sitting at 25 cents at the moment, there are a lot of naysayers. A lot of people get very, very anxious and impatient about XRP growth. But let's not forget, back in March 2017, XRP was sitting under a cent. Just think of VeChain right now, guys. VeChain is just over a cent, so actually more than what XRP was worth at this time. And think about it, if in 10 months VeChain reached $3.50, how many of you guys would be super, super excited? Well, that exact same thing did happen for XRP. Markets go in cycles. We will continue to see pumps. Then I saw this, guys, and this just recently tweeted out by Brad Garlinghouse earlier this morning. Lots of speculation last week as Team Ripple considers some very important decisions about our future. I want to clarify a couple of things related to some of what I read. He goes on to say, Ripple is a proud US-based company. Ripple abides by and supports critical laws like strong BSA/AML controls that keep bad actors out and consumers safe. We are not looking to evade US regulation. However, last week's DOJ reports lists 8 separate U.S. regulatory bodies, each with a different view. Crypto is property, crypto is a commodity, crypto is a virtual currency, crypto is a security, etc. Regulation shouldn't be a guessing game. Brad Garlinghouse then posts the reference to that. He goes on to say, to make matters worse, some U.S. regulators have already made decisions that actively favor Chinese technologies over U.S. companies. Legislation like the DCEA can bring U.S. companies to equal footing. The lack of a single national regulatory framework is putting U.S. innovation and U.S. companies at a significant disadvantage. All we're asking for is a level playing field. If we need to move to another country to get that, then that's the path we will have to take. Ripple essentially laying it out there for US regulators, stating, look, we don't want to do this, but we will if we have to. So we've got Crypto Spanglish here with a question. When clarity is finally provided, what actually happens next for XRP? What is the lack of regulations preventing from happening exactly? Oh, wow, that is a very, very novice question, but of course, Green Eggs and Ham responds to this. The key is growing sustainable liquidity and developing a self-sustaining ecosystem. They'll have more partners wanting to use XRP. The network effect will take hold, and I think they will still have some growing pains to sort out around liquidity, but ultimately, that is what's going to bolster the XRP ecosystem. Okay, the partnerships are part of it. Building liquidity rails are part of it. Of course, just the clarity with regards to cryptocurrency is a big part of, it's kind of like the starting gunshot at the beginning of the race. The cryptocurrency regulatory clarity is going to unleash a lot of activity in the crypto space. And that's when we will see a snowball effect. So that is a question that we've been addressing on this channel and many other channels over the last several months or several years, quite frankly. Somebody down here actually asked something very, very interesting. Yes, it's 2020 XRP. Thanks, Brad Garlinghouse, for trying to clarify Ripple and your points, but I am still not clear after reading your last point. Is there any time limit by when you will wait for US regulation to clarify? And I have a feeling Ripple doesn't want to put a time limit on it, but, in the boardroom, of course, I'm sure they have a plan. I'm sure they realize, look, if we can't do this by this date, we have to move. So Brad Garlinghouse clearly hasn't addressed that point, which I think is one of the most interesting aspects to this tweet thread. When? If you can't, you're not going to keep waiting indefinitely. You're not going to keep waiting to 2021, 2022, but are you going to jump tomorrow? Are you going to jump next week or next month or in 6 months if we don't see regulatory clarity? These are all very, very interesting questions, guys. I will link this tweet thread in the description if you want to follow that. Not only that, guys, Esoteric XRP brings up a very, very good point. Some folks here are unbelievable. That's fine. Nobody knows the future. Now, please tell me how, though. How can Ripple bring the World Bank, the World Economic Forum, the European Commission, the ECB, the Federal Reserve Board, Accenture, everybody together to speak at their conference if they are irrelevant? And that's exactly the point. Ripple already has these connections. Whether we hear about it in mainstream news or not, these bodies are significant with regards to power around global finance and moving money. Okay, if Ripple was so insignificant, none of these guys would be attending Swell. And so D here down here says, hard to dispute this. They dispute the fact whether or not XRP will have a role, and if it will have a role, whether or not the tokenomics will grow the price of XRP substantially. AJ XRP down here saying, watch what they do, not what they say. And I agree with the other comment about they're probably secretly buying bags of XRP. Now, XRP, could it be one of the financial sector's best kept secrets? You and I, we buy XRP even though price supposedly keeps getting suppressed every single day. When you look at the trend over the last couple of years now, coming up to 3 years, we have seen nothing but downward momentum. Tiffany Hayden has gone on the record saying, look, I'm not holding XRP anymore. The price keeps going down. Why would I hold this? Lots of other detractors in the space also saying, why hold something that keeps moving down? Well, these people obviously don't have the patience. These people don't see the bigger picture. And you know what? Maybe, just maybe, if you want to trade, day trade, to make a quick buck sooner, maybe this isn't the token for you. Maybe you should get into something else, something a little more risky. But XRP, guys, is for hodlers, and it's interesting to see these connections and to realize, to actually understand what this means, what the optics of this means for the cryptocurrency industry and XRP in particular. So thanks so much, Esoteric XRP, for posting that. I want to keep moving along, guys, because we have heard this narrative of this great financial reset, and I saw this a few weeks ago, but I wanted to bring it up now because I have a feeling that this is going to get some people very excited in the space. A new Bretton Woods minus the dollar. This coming from Carlos at 34_J Carlos on Twitter. And again, like I said, it was from a couple of weeks ago, but it has to do with this time frame now. Today is October 12th, and all this is happening right now. This document states it all comes down to what might happen this October when the International Monetary Fund meets between October 12th and 18th to revalue its special drawing rights, the SDR. The world's reserve currency waiting in the wings, essentially a new Bretton Woods in the making. And I have an article here, guys, this back from May of this year. Capitalism has a natural way of resetting itself. Markets reward winners while punishing losers. Losing businesses restructure, find a better angle to compete, or they go bankrupt. The business owner, hopefully wise enough not to fall into complete ruin, starts over and re-enters the market wiser and more competitive than before. At least that's the idea. And what this article essentially states is that the entire world economy has been mismanaged, and we are essentially looking for a new way to value fiat money. And this is an argument for dollars being backed by gold again. Now, I know you guys have heard about the Jassara thing. It was a very popular video I did back in the summer. I'll link it up here in the top right-hand corner. It goes on into more depth about this if you don't know about it. This article basically stating that because we are now seeing a pandemic, that this makes more sense than ever to reset the economy now. So the IMF's SDR is a form of world money created in 1969 as an alternative to the US dollar in case the dollar somehow fails. That was the idea. They were issued on several occasions from 1970 to 1980, but then there were no issues for almost 30 years until August 2009, which was in response to the last financial crisis. Well, here we go again. The IMF knows the SDRs are unpopular, but they also know the world's desperate for liquidity right now during the pandemic. To exploit this crisis, the elites are thinking big about a new Bretton Woods-style conference, a new international financial system, and a global tax system. SDRs would eventually replace the US dollar, at least in this theoretical situation, as the global reserve currency. According to a recent Project Syndicate report, both the IMF and the World Bank are being asked to throw away their rulebooks to save the world's imperiled developing economies. The problem with the current financial system, hammered out in 1944 at Bretton Woods, is that it was built for a different world, aiming at preventing wars and regulating economic function on a global scale. Clearly, it was a world of industrial production, manufacturing, trade, and most importantly, clear borders where physical goods, cash, and commodities were traded. Now, guys, we are looking at a very, very different world. And so resetting the financial system, which we have heard leaders from the IMF and the World Economic Forum continuously talk about on Twitter. Guys, they're putting this out publicly on Twitter. Follow them on Twitter and you'll see the videos. Today's digital world hardly recognizes yesterday's economic needs and reality. A new technological and governance structure is necessary to upgrade a defunct system. So goes the argument. If you read between the lines, the prospect looks less like a rebalance and more like a physical reckoning on a global scale. When it comes to the IMF and the World Bank, voting rights are based on the size of each shareholder. The G20 nations make up the key players, the largest being the US with 16.5% voting power and conversely veto power. Although the Trump administration has generally been cooperative with the IMF over the course of President Trump's tenure, things took a turn in recent months. Okay, and so then it goes on into what President Trump did. Guys, I will link this article in the description. There isn't too much more to this, but it is a very, very interesting article if you are interested in this idea that the financial reset will indeed change the structure of the economy, could mean that your fiat will be worth something different based on different factors. In this case, the argument is for gold. As they had discussed during the Bretton Woods Committee, I did do that video on Jassara, so check that out if you haven't seen it. But there's more, guys. There's more to this because there are some intellectuals who were discussing this kind of thing even back in 2018. I want to play you this clip, guys, from Richard Werner. Now, for those of you guys who do not know, he is a German banking and development economist who is currently a professor at the de Montfort University, but he did a talk back in 2018 before the pandemic. Here's what he had to say.
How have the central bankers, this is my last slide because my 12 minutes is just up, have reacted to the truth coming out? They admit that they've been telling porkies, and now they propose to increase their power. So central bankers belatedly admit, oh, now that you've mentioned it, yes, banks create the money supply. So let's abolish that now. And also, by the way, let's abolish cash. So what should we do? Well, introduce digital cyber currency that central banks issue and control, and thereby gain total control over all economic transactions, decisions, and the whole lot you've just heard from the CEO of the GDI. So the greatest concentration of central banking power in history is really the bid they're aiming at. That's the central bank's goal. And, of course, digital accounts of dissenters and regime critics could be switched off. It'd be very difficult to even purchase necessities. So this is an Orwellian dystopia of total control, the end of any freedoms. That's really what central banks are aiming at. Several central banks have, like the Bank of England, already prepared their microchip implant, RFID chip, to be implanted under your skin.
Whoa, whoa, whoa. I'm just going to stop it there for a second. Did you guys hear that? In 2018, the Central Bank of England has already planned for a microchip implant under your skin. I just wanted to take the time to show you guys a video that I did back a few months ago, 4 months ago. This is the icon. I'll link it up here in the top right-hand corner. And I mean, well, you can see the guy in the icon. His name is in the title. It has to do with chips under the skin. I'm keeping my description of this very nondescript for certain reasons. If you guys are looking at the screen, you can probably get a sense of what I'm going to be talking about in that video. A lot of interesting information. It was a deep dive that I did back 4 months ago. Considering what Richard Werner is saying here, let me continue with this clip.
And why is the sudden discussion about universal basic income from all the grassroots and inverted commas movements and billionaires? Oh, universal basic income is the bribe for you to accept the microchip. The overarching trend of the 20th century is concentration of power in the hands of the few. That's what we have to keep in mind. We have to work against this. We don't want to have these unaccountable central planners making decisions. We need decentralization, and the solution therefore is to maintain public money in the hands of local community banks, decentralize decision-making, give local people the power in the form of local public banks and local not-for-profit community banks. As I walked in, I was delighted to see that the Gottlieb Duttweiler Institute is also about Genossenschaft and cooperatives. And of course, the majority of banks in Germany are cooperative banks. And that's really what we need.
So he finishes there saying, the solution is to put the power in the hands of local banks, because having CBDCs is essentially what he's describing here, is going to really put the control in the hands of the powers who control the monetary supply. And we know what family owns most of the central banks around the world. I'm sure you guys have heard of the Rothschilds. Very, very interesting clip there. Also notice that sidebar when he was talking about the UBI, and the bribe is going to be, well, if you want your UBI, you just got to put this chip in your arm. Don't worry about it. You'll get your money. Interesting presentation, to say the least. Now, let's get back to this reset. So to reiterate, Carlos's tweet outlines the fact that the International Monetary Fund is meeting between October 12th and October 18th. Now, I also saw this from Matt Morrow, IMF Annual Meeting 2020 and the virtual schedule. He links the schedule here for those of us that want to take a look at it. And here's just a graphic showing us that there is indeed a virtual annual meeting, October 12th to 18th. But what some people have noticed is that the last day, October 18th, has been removed from the schedule. So here's the schedule, guys, and you can see over here in the left-hand corner, so September 28th, 29th, September 30th, and there were some other things happening during the month. We've got October 5th, 6th, 7th, 8th, 9th, 12th. So there are a couple of days missing here, but let me just point you to this: 12th, 13th, 14th, 15th, 16th, 17th, and then 19th. Now, of course, there are other days missing on this schedule, maybe because there is nothing scheduled on those days. Yet, this IMF meeting states clearly that this is happening between October 12th and 18th. Yet there is no October 18th listed on this schedule. They skip the 18th altogether. Here's another something of note that I want to bring your attention to. This coming from Nabil. You know what's up when it's missing. Check out the current transition month of October. The entire month of October missing in the plan. October 18th is the real deal here, guys. I'm telling you, one world ignition. And he points us to this graphic here, outline, and it's, you know what, this isn't a new graphic. This is from 2019, September 2019, outlining the financial institution's transfer plan, and this is coming directly from the SWIFT organization. And here's the timeline, okay? They have September through to December 2019, the early adopter program draft timeline, so it gives you guys some items here on the timeline, milestones. So Sibos, phase 1 kickoff, phase 2 kickoff, then implementation through the majority of 2020, July, August, September, and we're missing, guys, if you're not looking at the screen, I suggest you look at it at this moment, at least for a second. There is no October 2020 listed on this schedule. This is when version 2 was supposed to go live. And again, guys, this from a Swift document. Now, if you look down here with regards to this document, it gives the document name, GPI for Financial Institutions Transfer version 2, the early adopter program, and it was for September 2019. Do not disclose this publication outside your organization without Swift's prior written consent. Now, I don't know if this document has since been allowed to be published. This is obviously just from a tweet that I saw, and this is just not even the full document. This is just a screen grab from Nabil here on Twitter. But I find it very, very curious that they have omitted October 2020, coincidentally the same time frame that the IMF is having their meeting, in which they have coincidentally omitted October 18th on their schedule. Not because it's not part of the meeting, because we see the last day of the meeting is October 18th. So does this have significance, guys? Is a great reset looming? Are we going to see significant changes this month, specifically on October 18th, that will change the financial landscape? And here's another extension to my thought, guys. Maybe Ripple has even decided after October 18th, because that's when this whole thing will be at its most critical point. Some food for thought, guys. I am clearly speculating on this, but these connections really do paint an interesting picture, in my opinion. I finally wanted to show you guys this. If you're looking for a $100 XRP, of course, guys, it's all about the right opportunity and being patient. This is Chris Camillo, just to give you guys some perspective on who this guy is. He started investing in 2007 and invested $20,000 in the stock market and produced more than $2 million in investment returns during the following 3-year period. Listen to what he has to say about investing.
I might be waiting 8 or 9 months to catch my next big investment, but it's all about patience. I say it's like the big wave surfer. You know, big wave surfers will wait for months and months and months for that big storm to come, and they're waiting, they're plotting, and they're very patient, and they travel wherever it is around the world to take that next big wave. Well, I invest the same way. It could be September of 2013 before I make my next big investment. You have to be patient. In the interim, I'm just going to continue to live my life, read lots of magazines, go to the movies, go to restaurants, observe the world around me, and continue to hone my sense of critical observation. And that's something that any single individual person can do. You don't have to have a financial background to do that. And when you see something game-changing, if Wall Street hasn't picked up on it, that's an opportunity to make a game-changing big trade.
So there you have it, guys. XRP hodlers, listen up, says Arcane Manifest here on Twitter. I truly believe we are still early in the game. And if you're interested in listening to what Chris Camillo has to say, patience, patience, patience. That's the key, and I think so too, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.